Drop it.
What's up, team? Happy New Year.
Happy New Year. Happy New Year. You know what? I want to check this out. I tried adding this for the stream to make it a little more interactive. So let me see what I can do here. If it lets me. Oh, geez. Can I? No.
What are you trying to do?
So OBS had an update that would let me highlight the chat.
Oh, that's cool.
Yeah, but it's not letting me. It's not letting me do it.
We'll figure it out for tomorrow.
Yeah, definitely.
Oh. Hopefully everybody had fun. Nobody did anything too stupid over the weekend. It's time to get back to work. I know all you boomers out there are going to have like a 2-day hangover. It's okay. It happens.
Oh, boy.
Brant Cantor signed up last night, going through the videos now. Welcome, buddy. Everybody in the live chat, give a nice, warm welcome to Brant. Welcome, bud. Let's have some fun. Let's go make some money.
That's it. Let's make some money. How you guys doing? New year, new me, new green ink, new printers.
Turn on the printer. Dude, I'm so pumped. I can't wait for the market to open. Just get off to a hot start for the new year.
Oh.
Again, I think a lot of what we got to kind of talk about in this one is just expectations, set you guys up with the right mindset going into the year. I think you guys heard us harp on this just constantly last year. But we can't be aiming for these big gains. It doesn't make sense. That's not how you're supposed to trade. That's how every other retail investor is looking at the market. You have to do things differently if you want to have different results. So, I mean, you can take like what we're doing here, for example, when we do everything completely differently than everybody else does.
Yes.
And you can see the results. So thinking about it in terms of trading, you need to be setting yourself up for those slow compounding gains. You don't want to be up 10, down 5, down 15, up 20. That's not what you want.
Yes. For those in the back of the room who just happened to stumble across this live stream, trade1348.com, get the essence of what we're doing. We do things a little different. We do not speculate. We do not trend. We do not do any of those forecasting type of strategies. We are reactionary and we just follow the trend, right? If anyone followed the trend with Tesla to the put side, he'd be very, very, very rich at the expense of Elon Musk, the first man in the history of humankind to lose $200 billion. That is owie. Well, it's
crazy.
It's a paper loss, but still.
Yeah. I mean, I feel like he was a little bit ready for it, though, because, I mean, I think the split adjusted value for like when he tweeted out like Tesla stock's too high, it was like 50. So he knows. It's not like he understands that a lot of what's going on and happened since 2020 was kind of bullshit. And they need to reel things back in. So I think he's prepared. Remember, Elon's not like a guy that's just going out, just buying literally everything in sight. He's going to be fine. What he may not necessarily be fine on is he'll be like, damn, now I can't start new businesses to basically change the world. But
well, I mean, he's got SpaceX. His holdings in SpaceX has him valued at like $47 billion. Just SpaceX alone.
That's crazy. That's crazy.
He could have literally bought 2 SpaceXs instead of just fucking buying Twitter and just.
I think it's cool though. I like the Twitter stuff. Even I don't know how much money he's gonna be able to make on it in the future, but I like the Twitter stuff that he's doing.
Oh man,
like he's gonna screw things up, but I think he's doing an overall solid job.
Let's hope on that. There's a lot of people who have their money tied to Tesla, and they're counting on them.
Let's see. I mean, we have a little bit of this week heats up a little bit in terms of the data, but it's not like it's more so like it's just employment data coming out. So we're gonna have Tomorrow we get S&P US manufacturing, PMI, construction spending. Wednesday, job openings, job quits, and the FOMC minutes, which are going to be pretty important. The market can move off of that. ADP employment report, normal jobs report, initial and continuing claims. Then Friday, we have non-farm payrolls, unemployment rate, average hourly earnings, and labor force participation rate. Those are probably going to be the numbers that a lot of people are looking out for this week, Friday. So we could see the volatility come back. And if you think a little bit about like tax loss harvesting as well, it's possible that you see a little bit of buying come back this week as people were taking those losses in the beginning of December when the market was high and trying to avoid those wash sales and then coming back into the market in the new year. That's possible as well. So I think, again, it's be reactive, not predictive. Leave the predictions to Pythagoras, Invictus. They're better at it than you are.
There you go. Now, Leo, go ahead and talk to Diana about that. We gave you a whole entire month, Leo, to cancel Patreon. So if you got charged, that was on you. Right? We're here to day trade and learn to trade, not deal with something that should have been your responsibility.
Yeah.
Yes, Nicky Ricky, I will never let this kid go. But, 'tis the season for small and mid caps. It's the beginning of the year. You're going to see money go into the small and the mids. And hey, like, it's a shot in the dark, right? But people like to spread their wealth and see what hits. Warren Buffett said if you had 20 stamps on a card, you just need 4 to 5 to hit, and you will become extremely, extremely, extremely wealthy. So that is basically the mindset of investors coming in, especially in the beginning, barring, the likes of, with exclusion too, the emotional damage stocks, AMC and GME. Sorry, guys, right? That horse has had its day. All right, Happy New Year, everyone. Let's get to it. STV, what do you want to cover today as far as like the charts and really highlighting the strategy and getting people, just refreshed and ready for tomorrow? Because I feel like tomorrow could be like a highly volatile day. We could actually see a run up in the market. And full confession of what happened to me on Friday. I shared this with STV. I got distracted.
Oh, you can't tell them yet. Don't believe. Make sure you leave out the one part of the story.
Oh yeah. I was actually talking with him, and we were just like, talking about plans and future plans, and I completely forgot I was in a spy put, and the spy put would have played out if I was actually on it, just paying attention to it, but it actually worked against me, and that was an owie moment. Yeah, I don't like seeing even 14% losses, but that's what that was, and it was owie. But I guess just take it from my experience. That was a humbling reminder that no matter how much experience you have trading, you have to respect your portfolio, your money, and just stay on top of things, right? Don't expect things to just go your way simply because you think they're going to go your way, right? That's when arrogance really humbles you. So I got humbled before the end of the year, and
Don't let me distract you with my ankles.
So yes, I got humbled at the end of the year. And I did buy more time. I had for next Friday. But yeah, the spy decided it came up to the 200, rejected. That's what I was waiting for. So I was playing that rejection, and then I just lost track of it. It ran on me. Actually, full disclosure, I could share with you guys where it happened. Right. So let's go to the spy. I'll show you guys exactly where that happened, and it just like ran away from me. I came in off of this rejection here on the chart, right? I'm like, all's good. We're good. You just lose track of the
Come
trade.
on.
You just lose track of the trade, and it's just like, boom. Like, oh, shit.
You still finished green on the day, though, didn't you?
Yeah. I was still 0.4% green. Not a whole percentage, just a little shy of 0.5%, but still, that was reckless even for me. Yeah.
Yep. I think the one thing that I'm going to just continue to drill in your guys' heads, and something we're going to talk about a lot more, is setting your risk at a level on the chart. Because yes, the absolute maximum that loss that you want to be taking on the trades is 10 to 15. But you should always be looking for a way or a spot on the chart in order for you not to take that 10 to 15% loss. If there's a place that's going to signal to you that the trade is no longer going to play out before it gets to 10 to 15, that's what we need to be doing. That's why we have that risk management video. So, I mean, it's a game of risk. That's all it is. It's keeping your losses smaller than your wins, winning more than you lose. That's all it is, guys. It's it's easier said than done, and it takes a lot of discipline to be getting out at those times when you're only down, let's say 4%. But let's say that trade ends up going and running all the way down to minus 15%. Then you have to take a 15% loss when you could have taken it at 4 or 5 or 6.
Yeah, yeah. So Tuxedo Flux asks a really, really good question. Gabe, do you have an extremely low percentage that you will get out of a play? So I do play up to 10% or up until the indicators tell me, bro, you're wrong. So if the indicators tell me, bro, you're wrong, and it happens to be at 7%, then I'm out at 7%. If it happens at 10%, I'm out at 10%. If it happens at 5, I'm out at 5, right? So my maximum allowance is 15%, unless the indicators just, say like, all right, stupid, get out, right?
Earl has a good question too. Do you exit trade on limit order or market order? I mean, usually, in the past, I would just limit order to get out. I think, Gabe, you like market orders to just get out quick. But with the stop loss strategy, technically, I'm market ordering the entire time. So I'll set my stops in profit. I'll move them up. And if they get hit, that's a market order. So, but again, I'm just using that stop loss strategy, that video that I've been trying to drill into your guys' heads and that strategy for a while. So yeah, it is technically market orders.
Yes, yes. For me, market orders, yes. STV noted, especially, if I see we're coming up into a level, you don't know if it's going to hit, and you overchased it, right, with the limit. So I just play market, especially going into those zones. Make sure I just get the hell out. Like that's just really. I will play a limit order when entering, though.
Yeah, me too. I'll always enter on limits. Again, for those of you guys that don't know the difference, market orders guarantee a fill but not a price. Limit orders guarantee a price but not a fill.
Yeah, yeah. Let's see. What else? Right, how many people do we have on the stream here?
160, not bad.
Not bad.
I feel like everybody's hungover doing stuff today, taking the day off.
Dude, there are a lot of people who were hungover yesterday. No, funny story. So yesterday I went and purchased an additional vehicle for the Turo fleet, and the finance manager, he was wrecked. You could tell it was misery. He wasn't even trying to sell me anything, like the extended warranties or any of that. I was like, bro, this is a fleet vehicle. Like, just give me tire coverage. He was like, all right, bro, I want to get out of here.
Yeah. It's like, I need to go home.
He was wrecked. Dude, his face was still shrimp red. So
Still hammered.
Oh, he was pounding it the day before.
Yeah. Yep. It is what it is. It happens to the best of us. I'll tell you, we'll do story time tomorrow. I did tell you guys I was going to tell you what I did. I'll tell you tomorrow during one of the streams.
Yeah. STV is just being young and just be young. Enjoy it, man. All right, so let's get to these charts. I mean, STV, what do you think? What do you think gives us good teaching moments? The Spy or the Netflix, or does anybody have a play that you could just bring up and we could just like break down and create a teaching moment off of it?
I mean, if you're looking at the Spy chart, I mean that from Friday or basically any of the charts, that's textbook reversal strategy again. It plays out all the time. I mean, I can't stress this enough. Like, you combine our core concepts with 1348, Invictus, Pythagoras, Trader Joe, with the stop loss strategy, the risk management, it's game over, guys. Like, I know a lot of you guys have been doing it. I saw your gains go from like X amount, and then you just went whoop right up to just these. It's nuts, especially like Vasco Dave. Like, I've seen some crazy people in here. I mean, Holden was up like 700% in like 3 weeks, dude. That's ridiculous.
Yes. Okay, so Tuxedo Flux, before we get into it, he's asking really good questions today, and I like that. What do you mean by size up or size down in a play? STV, you want to take that?
Well, it's just trading with a higher principal amount. That's really all it is. So like if I say I'm sizing down on something, there's a reason for it. It's either like there's a lot of chop, there's a lot of volatility, there's something happening. I don't necessarily trust as much of what I'm seeing on the charts or the market because there's news coming out. So maybe I'll trade with less. If I'm sizing up, then I'm probably going with that full 10%. That's all that is right there.
Yes. For me, sizing into a play, you guys have heard me talk about this. I do quarter, quarter, quarter,
Mhm.
right? So if I'm expecting to buy four contracts, I will buy one contract at a time as the move it's confirming itself. And this is also one of the reasons why, for myself, I can, a 15% play, right? 15% stop loss, when your entry is 2.5% instead of 10%
Mhm.
allocation, right? For me, it much easier to digest, right?
Mhm.
So that's why I like to just quarter, quarter, quarter into it in case it does work against me. And again, once the indicators tell me, like, bro, play's dead, I get the hell out. All right.
Mhm.
So for me, I feel like using that strategy just very, very simple for me. And it literally, uh, it it's kind of like STV stop loss strategy, right? It
Yeah.
just minimizes your risk and your exposure. And for me, that's what this game's all about: risk
Mhm.
management and exposure.
Yeah, I'll do something sort of similar. Sometimes I'll scale in, like I'll bite, take a couple contracts, take a couple contracts, and this essentially just scale into the risk level. So if I have a level of risk, like a level on the chart that I know that the trade's going to be invalidated at, I'll scale into that level if it starts to go against. But as soon as it crosses, out.
Yeah. Um, Thoughts on GTII and COSM?
Bullshit
Garbage,
stocks.
just
Yeah, garbage.
garbage,
The
Jeremy.
only thing, yeah, the
Yeah.
only thing I would do
Any.
on those is play the reversal strategy to the downside if they pumped. Like penny stocks, we don't do that shit around here.
Yeah. So anybody who gives themselves, the title of trader would never touch such things. It's just the risk there is just ridiculous. All
Yeah,
right.
the only thing that they would do is wait for a bunch of people to just fly into it, and then they would just short it when it shows a sign of weakness.
Oh, wait, we do that too.
All the time. That's what the reversal strategy is. I love it.
That's what the
It's just
reversal
literally what it is.
strategy is.
It's so
We do that
awesome.
too.
You just wait for it to get tired. The buyers or sellers are not going to be there forever, and then whoop.
That's it. That is it. Yes, you implement the quarter, quarter, quarter strategy with STV's stop loss strategy, guys. You have like such an ironclad risk management system in place for you.
Mhm.
It is so fucking ironclad, right? Remember, focus on not losing money because when you focus on not losing money, then the opposite is true.
Mhm.
So, let's look at Nvidia on the daily. I saw that was a request.
I think it's hunting a cross down, or it either did or it's hunting one.
Ooh.
Yeah, on Webull it just crossed. Let me see on Trading View.
I do have a video on quarter, quarter, quarter in my day trading series on YouTube. If I need to redo that video, I certainly will. But, um, dude, it's right at a level here.
Mhm.
The moving average is actually breaking below 50. It's 49.49. I like that actually.
That's not
And
bad. I mean,
yeah,
I would like personally, I would like it like to enter that closer to the 48 or the 13 if I'm playing the downside, almost catch a rim basically with that moving average on the RSI because then the risk is tighter. But again, if you're looking at the daily, like we always say, there's two ways to trade the daily: size it for zero or get way more time than you think you need, but like way more time.
yes,
Because
yes,
you have to set up a swing trade on the daily, basically to mimic like the same like volatility that you're gonna see on the 5 minute. So you're gonna need a shitload of time. And do we ever use candlestick patterns? No,
nope,
no.
no. Okay, so let me explain to you what STV's talking about, right? So basically, we've got a candle that's right at a level, right? Typically, levels are where price actually either rejects or breaks through, right? Now, there's two ways to play this. You play it, you wait for the reversal to hit that 13 and the 48 right here, which also happens to be at or about another level here, right on the top side. And then you wait for the indicators to confirm or maintain that it's in a downtrend. So basically, you actually get the contract cheaper as you play it back down. Alternatively, if you get a break below this level here, which is 144.49, a full candle break below, then you would enter with your risk being exactly that level,
Mhm.
right? So that's how you would go ahead and manage the risk here on the daily. Of course, give yourself time. Time is your friend
Mhm.
until it isn't.
Yeah. K Robinson's asking how much more time, how much is way more time in the daily? This market, 3 to 4 months.
There you go.
What is sizing it for zero? Good question, Algo. So sizing it for zero is you're essentially trading with the stop loss that you would have on a normal size position. So let's say you have a $10,000 account. You're following the rules. You're going in with $1,000. You're let's say your stop loss is usually 10%, which is also 1% of your account. You can go into that trade with either anything less than $100 makes sense. You can let that trade expire worthless and you are still well within good risk management parameters. That's perfectly fine. We talk about that sliding scale of risk a lot. So when you are sizing fully into the trade with $1,000, you're not risking $1,000. You have your stop set. It's still 100. Like you could technically go in with your entire don't do this, but you could technically go in with your entire portfolio and risk 1% on the trade. Is that smart? No. That's why it's a sliding scale of risk. Anything on the complete outside of the scale is going to be more risky. Like sizing it for zero is technically very risky. Is it? I mean, you're still within good risk management parameters. If you full ported it and you have contracts that expire in like 3 years, we're not going to move around that much. Are these things that you should be doing all the time? No. This is just a drastic example to illustrate the sliding scale of risk.
There you go. I love it. I love it. I love it. Okay. Let's see. So, any other tickers here, guys? You guys are asking all the right questions.
I like them. I like these questions.
Yes, I do too. Really, really makes it worth it for us to jump online because we love sharing, the strategy. We live and die by it, guys. And we want you guys to make money.
Oh, Josh has a good point here.
What's that?
Josh says, I feel like any stock will make you money as long as you're disciplined. I kept moving my stop loss in Cosm and made 22 grand in a week. So here's the deal. When we are being asked all the time about those types of stocks, those penny stocks and the stocks that everybody's talking about, my mind immediately will go to, you are asking me to confirm your bias that it's going to go to some wild, crazy number.
Yes.
So that's why we're always going to default to not for us.
Yeah. And I'll let you guys in. I mean, for those who are new, I've said this publicly. I'm not a pump and dumper, but I will pump the shit out of something if I see I can in pre-market, and I will dump it on you like I give zero fucks. It's a zero-sum game here, right? I will never tell you guys that I'm jumping into anything or penny stock, but if I see it moving, oh yeah, I'm part of it. And I'm going to dump it on you as soon as market opens. Guys, you see it happen each and every day. The dollar is weaponized. And we've said that the dollar's been weaponized for over a year now. Welcome to 2023, where the dollar will now become a nuke. And people, listen, if you're not trading smart, if you're doing the follow me trading, if you're doing the Wall Street bets and, just sort of brainwashing yourself with DD that's coming from sources that, my God, they probably can't even wipe their ass right. These are kids. You're asking for a world of trouble, big world of trouble. So just stay away from those things. I mean, yeah, you're going to have success stories in pretty much, you're always going to have success stories no matter what, no matter the industry, no matter the ticker, no matter whatever, right? but you're gonna have a lot more failures than success stories, especially in pennies.
Hmm. Yeah, penny stock. I think the only time that I would actually trade a penny stock is with my reversal strategy, and I would only look for when they're skyrocketing for no reason. I just don't like them. I think the risk reward is weird. The liquidity is usually shitty. Like for me, it just doesn't fit what I like to trade. And that's why when you guys ask me all the time, I'm like, I don't like it. If you're gonna trade with proper risk management and not do anything really stupid, and you see what's his name was saying, he was up 22 grand. Hopefully you realize those gains. If you're locking in profits and you're moving stops up, there's nothing I can say to you. That's great. I'm happy you made money. You traded with good risk management.
Yeah.
But is it something that I'm going to be doing? No.
Yes. So Mario has one more question. If I play the daily 3 months at least, where do I look for the reversal to go out? The 4 hour? I think you could hang out on the daily. Because the 4 hour, you're gonna see those peaks and valleys in the 4 hour as you're trending down, right? So even though it looks like it's reversing in a downtrend, and the 4 hour will get you caught up in that, right? So if your thesis is built on the daily, um, just follow the daily, because the daily is such a strong trend by virtue of its time frame, right? That I mean, I really wouldn't count on much else, right? It's such a powerful trend on the daily. Now,
Mhm.
what we do with the 5 minute, we look at when we're on the 5 minute trading on the 5 minute. The reason why I look at the 1 minute is to better understand why we have consolidation. And if I could find it on the 1 minute, then that'll confirm for me on the 5 minute, like, all right, it's time for me to get out. Okay.
Mhm.
But with the dailies, I don't know. Maybe STV has something else to add to that, a different opinion perspective. What you think?
Yeah, Northeast Beaver has a good question. Why 3 to 4 months? What kind of gains are you looking at? That's not the right question. For gains, you have to. Okay, so let's put Gabe. Can you pull up Tesla on the daily?
Tesla?
Yeah, this is a great illustration of why you want more time.
Ooh, yeah, sure. Let's do it.
Because if you look at Tesla, there's two main reasons why that you want to be getting that much time. Well, sort of two and a half. But so if you look at Tesla on the daily here, and you see the last time that it crossed down, Gabe, what was the date of that? It's like October 1st, September 30th or something. It's pretty
September
close.
30th. Yeah.
Yeah. Okay. So you go from October, November, December. That's 3 months right there. Look what Tesla's done. If you only had a month or two on those contracts, yes, you would have made a bunch of money, but at the same time, you weren't able to fully capitalize on the move. So if the move is going to continue and draw out for an extended period of time, you want your expiration date to be able to capture that full move. The second is that if you're looking at like contracts that you're holding overnight within 30 days to expiration, theta is going to be really ramping up. So theta decay is going to start to accelerate the most rapid as you get within 30 days of expiration. So what you're doing when you get more time on these contracts is you're lessening the volatility. So you can, one, stay in the play for longer, not get stopped out, and hold the trade for an extended period of time if it's continuing to show you that it's moving in the proper direction. Does that make sense?
Makes a lot of sense. So this is a 65% move. In the world of contracts, what would that be, STV?
Well, I know that Wreck-It Ralph played leaps on them. So he had like a year plus to expiration on those Tesla puts off the daily cross. And he was up 780% at one point. So
God. Oh, these crosses. They're the truth.
ooh, options versus futures. I think we've seen a shift, Jeremy, this year where a lot of people have started to trade futures. One of the reasons for it is that, I mean, people aren't seeing the types of gains that they were used to. Futures are highly levered. So people who are just trading the SPY, you can get a little bit more leverage. You can set your risk levels on the chart a lot easier than if you're trading actual futures contracts versus options, because there's a little bit of a guessing game that you have to play because of the Greeks. You don't know what your contract's necessarily going to be valued at if it hits a certain level, because there's a time premium issue there. You just don't know how, like, when like how much theta is going to affect it and when the trade's actually going to get to that point. With futures, you know exactly what you'll be down on a certain or up at a certain point on the chart. People like futures because of the tax benefits as well. But again, I mean, if you're just trading like indexes or market ETFs, it's not a bad idea. I mean, I'm going to keep trading options. There's no reason not to.
Yes, STV is like, Gabe, let's trade futures. I'm just like,
You could do it. It's fun.
Fun,
Oh, Wreck-It
exactly.
Ralph is here. You're still holding those leaps? Jesus.
And he's adding shares with unrealized gains. You know, that's actually kind of really fucking smart.
Hopefully it's realized gains. Because if it's unrealized, you're just throwing more money at it.
Yeah. So he has an expectation that he's made 70 grand, let's just say, right? So then he's pretty much just saying, all right, so I got 10 grand sitting around. I'm going to buy Tesla shares and pay myself back, you know, when I sell these Tesla options. I mean, yeah, that makes sense. So are you attempting to time that reversal, or are you cool with holding Tesla for maybe 2-3 years?
I mean, okay. If we're being technical here, if he buys those Tesla shares in the same account, he can technically sell them at higher prices.
Yes.
So if he buys blocks of 100 Tesla shares, he technically has the right to sell them at whatever his strikes are.
Yes.
So he's hedged nicely. But I see a lot of really good questions coming in here too. You guys are on a roll today.
Oh my God.
Like, what would be the consequence of playing credit spreads on the daily if you had a different account that was a margin account? Would you be taking on less risk? The risk is technically the same. You are just you're going to be inversing. You're going to be going against the crosses. So let's say you saw a daily cross down, you'd be selling call credit spreads. If you saw a daily cross up, you'd be selling put credit spreads.
Yes.
But you can set up your risk to be the same.
Oh, that is. Oh, Wreck-It Ralph is setting himself up really, really good for this one, because there's always going to be an idiot who's going to buy a covered call on Tesla. Who's going to buy a call? You're just, yeah, you're selling covered calls. Fucking brilliant. 20,000 of shares on 74,000 unrealized gains, same account.
Dude, that's a nasty trade. That is nasty. Good for you, buddy.
Wreck-It Ralph, man. Welcome to Super Saiyan level 3. Holy shit. Good stuff, man.
1348 for the win, dude.
Oh, yes. Oh, yes.
I mean, you guys better be starting your year off right. The 2-week free trial is still going.
Yes, 2-week free trial still going, guys. Go ahead, trade1348.com. Secure your education. Secure 2023. Put it in the bag already. Seriously, we're talking about life-changing money and putting yourself in a situation to develop a skill that allows you to pick money from trees. It's really, really wild. But I mean, I grew up with that saying, money doesn't grow on trees. And I live in a world now where it's like, yes, it does. Mm-hmm. Like, just give me a chart. I'm going to show you. I'm going to pull money out of thin air. Just give me a chart. I'm going to do it. Mm-hmm. Right? And money begets money. And this is what allows me to build out the Turo fleets and that kind of thing. So then, yeah, now I have pretty much something making me guaranteed returns full autonomously. Right? Anybody in a Turo game, you already know. So.
Yep. Would it make sense to take every trade 1 month out if you can afford it? I mean, they're just going to move slower. So you're just going to see less volatility. I mean, if that's what you want to trade a lot more relaxed. Sure. Yeah, I mean, you could do that.
You can certainly do that.
That'll help out with the slow and steady gains. It allows you to hold trades for a little bit longer if you're setting your stops at the right spots.
That's it. Yeah, absolutely. All right, how much money do you really need to trade and actually make money?
It depends on everybody.
Yeah.
Depends on how, like, is $100 like super meaningful for you, or is 1,000 or 10,000? It depends on the person.
Yeah. There's not a one size fits all, right? But you really have to come into the game of like, what's your goal? Is your goal like income? Is it growth? Is it, because if your goal is growth, then you could certainly go ahead and just buy shares up based on these crosses here, to the call side,
Mhm.
right? If it's income, then, a lot of you, and including myself, we play options. And the thing is that we understand the risk. All of us understand the risk,
Mhm.
right? So it's really just your tolerance, what you're willing to lose. Like, what money do you have that you give zero fucks about? And if you are like, well, I care about this money, and I've said this, I actually tell this to people who ask to borrow money from me, right? When people ask me, like, Gabe, can I borrow money? I was like, is your flat screen still sitting on your wall? You better go sell that shit before you ask me to borrow money.
Mhm.
Right. So if you feel like like, all right, this is a little more than I'm willing to lose, then just part with material objects. It's things that are just like worthless. Have like a garage sale. Just raise that capital so you
Mhm.
have that money to play with.
Mhm. Yeah, I saw another comment in here that we need to talk about. So trading way out of the money simply means there's less movement. No, that's really risky. Trading more time means there's more time to expiration, less movement.
There you go.
Out of further out of the money, more volatility.
Yes. Yes. And no 0 days. We're just gonna put this out there for anybody. Like, oh my god, we see it each and every day, and it just nothing gets my blood boiling more than someone playing a 0 day to expiration, especially when they're brand new to this game. All
Mhm.
right, don't do it. Please don't. Right? If you're up 1.5% on a day and you just want to play like O day, with 0.1% or something like that, like, hey, go for it.
Yeah.
But like, do not make 0 days a part of your trading strategy. It just does not belong.
No.
Yeah.
It's a really quick way to blow up accounts.
Yes. Winning loser says, will I still be getting alerts from the Discord? Yes, you will. Right. You still will.
And
Let's
K
see.
Robinson, yeah, it does. Anything with a chart works on.
Does the strategy work with futures? Absolutely.
Mhm.
It pretty much works on in any asset class. Like,
Mhm.
if it's chartable, 1348 is marketable.
Yep.
That's it.
Crypto for it works on everything.
Crypto's 15 minutes, by the way, guys.
Mhm.
Right. And okay, not financial advice, but this year, it's you guys knew it. No, I hate it. I hated crypto. I think this year, you guys are going to see why.
Maybe out of I don't know. I have money I have to deploy somewhere. I might put a little bit somewhere just to have some exposure to the asset class, but I don't have any right now. People love it. Uh, Not really for me. There's too much nonsense in that industry right now.
No, not really for me. Um, it's funny, right? It doesn't really have an underlying, right? And then, some shit can happen just like with FTX, and it's out of your control. Like, it's
Mhm.
wild like that, right?
Mhm.
Now you would need like a ginormous scandal, like Nvidia was actually selling AMD graphics cards in order to see like Nvidia just like plummet like that the next day, right?
Mhm.
The game is different, and I like the game playing stocks. I don't like the
Mhm.
game playing crypto.
Yeah. Again, it's high when there's higher risk, there's higher potential for reward. So again, it's going to boil down to at the end of the day, it's a risk management problem. It's how do you manage the risk? Crypto going to have more risk. How do you manage it?
Yeah. X-Ray says, Happy New Year's, everybody. Thank you guys for going live today. I have to go back to work. Yes. All right. NVIDIA just cost on a daily, by the way. Yes.
Yeah, we covered that one.
Yeah, we covered that one. All right, let's get into a 5 minute chart. I mean, STV, let's you guys pick a random 5 minute chart that's over freaking $10, and STV and I will go ahead and break it down relative to the strategy. So you can just see that, like, we can apply the strategy to literally anything.
Yeah.
Okay. QQQ is the first suggestion. Want to give it a
Um,
whirl?
what time though? Because like I don't really care how the like I don't until tomorrow morning. I don't give a shit what the charts are doing. I
Yeah,
don't.
yeah, honestly. But to better understand, like what happened during the day, what we would see during that day or at that time, just so people can get an understanding. AMC for puts. I like that. Um, you know what? Let's do spy. Fuck it. People are asking for spy. So
I mean, spies. Yeah, on Friday it was pretty straightforward. Spy was relatively straightforward on Friday. There was the two times that I was looking for were it was the reversal under the 200 at like 1, and then you had another reversal coming back to the upside. So, I mean, those are really the two that I was looking for. Other than that, it's not too much going on Spy.
yeah, on the daily, but when I'm looking at it on the daily, yeah, the daily is saying like, hey, RSI can go either direction at any moment. At any moment. So
Yeah,
you get an RSI breach through its moving average to the upside, you're going to start seeing some green candles, right? But then you see this bearish momentum. It's going light pink. So the
that's the
market,
daily.
yeah, the market bled, and it's coming to an end. Huh. This would be interesting. Let's see.
Yeah, I'd say it's 50-50 going into the new year. I don't like I'll continue watching stuff, but until we really see that first like 25-30 minutes of trading tomorrow, I don't care. Like it can do whatever it wants.
Yes. So let's say the SPY does go up 1%, which is typical of the SPY tomorrow, right?
Mhm.
That gets us right up to the 13 EMA here. I like that.
385. It's an
Yeah.
interesting one. Where are we at right now? Oh, it's right below like what did it close at? Right below 382.50. After hours was 383.28. I mean, we'll be watching 382.50, 380, 385, those levels there.
Yeah, definitely looking at these levels here. And then 388. Now that's a 2% move. That's not something I expect happening tomorrow. I mean, the SPY's proven us wrong. Last year, the SPY is
It can
just,
do whatever.
yeah. But just based on, let's go ahead and get the ATR here so you guys can see what I'm saying. Uh, the moves here, the range is 6.97 or a little over $6.90. That's the range. So it's moving in that range. So you'll see that oscillation of price action within that range of, $6, $7.
Mhm.
Um, and it normally settles in the middle of that range, right? So a 1% move is decent. If I'm playing it to the upside, I would have that expectation that you can play for that 1% and still make some decent gains.
Mhm.
Um,
I usually just try to catch $1 to $1.50 on the SPY moves. That's it. Just $1.
yeah. Paul says, I would love to know when you're playing rims. You know what? The rim is actually a strategy that was birthed in like the first quarter of last year
Mhm.
because you did have periods when the market was like trending, right? And
Mhm.
so, price was going and it was rimming, but now the game's changed, right? So you need to go back to your tool belt. You're Batman in the stock market. You got to go back to the tool belt and say, okay, well, I can't rim it, right? I have to go back and play traditional 1348, right? Because the market can just like turn on you like
Mhm.
instantly.
I would say it's fine to play. Just use the risk management strategy video. Use those concepts and keep your risk tight. That's what the rims are anyway. It's tight risk to begin with because you're playing it off the 13. So if it comes back down on the other side, you already know that it can turn on you.
Yes. Yeah. Um. Also, no, I don't like playing bios.
Yeah,
Oh
I don't like them either.
man, You know, when I hear people mention like bios or like penny stocks, it automatically brings me back like 12, 13 years. I really feel like that is like what every, you know, beginning trader is exposed to immediately. Like,
Mhm.
I don't know what it is about it, but it's like we all got to go through VPK or some shit. It's,
They
it's
see a move, they're like, "Oh my god, I wanna catch one of those," and it's like people and this is where you guys are set up so much better. Let's just say that there's a large group of people that are chasing those stocks higher. All you have to do is use the reversal strategy. You already know where it's most likely going to go, where it has a prior probability of going. Everybody else is buying. You're on the other side. You think it's going to go down because price is starting to get tired. Everybody's screaming, "Oh my God, everybody's buying, buying, buying." The chart's not saying that. The chart is saying it's most likely going to come down. So you guys with your contrarian thinking, and it's not necessarily contrarian, it's what the chart is telling you. It's contrarian in the sense that it's not what everybody else is doing. But remember, 98% of day traders or retail investors fail. So you have to do things differently in order to have different results than the rest of people. That's why we're here.
yeah. Um, one of the reasons why I don't like bio, is especially the cheaper ones is it's ultra sensitive to news, right? Um, it's in a trial or pending FDA approval, and it's like buy the rumor, sell the news kind of deal, right? Nobody is, fascinated by a pill that cures erectile dysfunction, but they're fascinated by the money that it can make. And imagine a sales pitch on that, right? Like, we have an ED pill, it's going to change lives. People are like, yeah. And then when it fails, let's say it fails its first trial, what happens?
Nosedive.
Nosedive.
That's the other thing about like pharmaceutical companies and biotechs. It's all news.
Yeah.
You're gambling on news most of the time. People like to say the chart's going to tell you where it's going to go. They're morons. They have
Yes.
no idea.
Yes. Yes. I'm seeing a lot of new names in this stream, and I'm liking that. That means either you're brand new to the community or thinking of joining. Well, if you're thinking about joining, it's trade1348.com. Again, trade1348.com. One more time, trade1348.com. All right, biotech
2 weeks free.
is predictive to the downside, yeah, because you can literally
Yeah.
see that momentum just dry the hell up. I
Mhm.
love them. I love them for that.
Yeah, the reversal strategy would work like ridiculously well on biotechs. Maybe I'll start doing that in 2023. Maybe I'll start screwing around with some biotech shorting. That'd be
Yes.
fun. That would be fun.
Yes. LLY could end up being a big downside reversal play. Let's.
Alan says he wants to join, but he doesn't understand anything about the stock market. That's why we have the full 0 to 100 learning curriculum for you guys. We bring you all the way through. That we have these live streams every single day, making sure you guys are learning things. And then not this Monday, this kind of what this is here for. But every Monday night, we're doing those beginner refreshers to make sure that you guys are caught up to speed. We have the one-on-ones where you guys can call in and ask questions. We got something for everybody, man. We want to make sure that we're bringing you guys up with us.
That's it. That's it. LLY that was brought up could end up being a reversal. As it stands right now, it could be. I would wait for a break below the 48 to confirm that. And again, have the indicators lead the way for me, right? We're on the daily. RSI as it stands is still above 50, so it's 52.98. So
Mhm.
this is not reversal material just yet, right? You got the MACD and the signal lines needing to come down a whole lot, right? They're really, really elevated above neutral at 0.00 at MACD 6.94, signal at 8.61. So that's a long way to fall. Should it decide to fall, right? But I would wait for the play to develop because as it stands right now, all you're really seeing is just some sideways action,
Mhm.
right? So let's wait for the markets to really figure out what they want to do in 2023. And we just play those trends. That's it.
Uh, Yeah, you guys are talking about credit spreads now. I mean, yeah, I mean you can sell at the money credits. I mean, it depends. You would want to give yourself a little bit of a buffer, so your short call or you can definitely H diamonds. You can definitely trade credit spreads with 1348 and just go against the cross. Meaning like against the cross, like cross down, you're selling call credit spreads, cross ups, you're selling put credit spreads. You can definitely do it.
This is mean. STV, this proof that there's a sucker born every fucking minute.
Why? What happened?
Where you teach them to play the opposite inverse,
Yeah.
and there's a market for it.
Oh yeah.
There's idiots. You guys are no longer idiots. I love it. I love it. You're empowered by this. You know, for those, again, brand new just watching who are curious, right? Let's go ahead and show the chart. You know when the ticker's coming down because you're alerted, especially on a daily. The daily moves are very, very powerful. You're also alerted to when it's going up. You see the call here? It's trending up. You see the put? It means it's trending down, right? We
Mm-hmm.
take a lot of the guesswork out of it for you, right? A call is trending up. This put
Mm-hmm.
signal paid, right?
Mm-hmm.
This call paid.
Mm-hmm.
This put signal paid. This call paid. Mind you guys, this is not a shit stock. This is the SPY on the daily,
Mm-hmm.
right? This put paid. This call way back here. This was November of 20. Well, it sure as hell like paid a lot before we got the put really quick and then the call. Once
Yep.
again, right? For those who are thinking about trading shares, you don't need to trade options. You can play with shares as well. The thing
Mm-hmm.
is, we will alert you on the daily. You're getting a daily alerts. You're getting 4 hour alerts. You're getting the 5 minute alerts, right? And it's very, very easy to trade.
Yeah. And again, I think this is something that I've talked about a lot recently too. You have to approach every single trade the same way. Like if you look at that chart on the SPY, some of those trades are going to play out way better than others. But if you're approaching it the same way and using the stop loss strategy that we've been talking about, you know you're guaranteeing the base hit and leaving yourself unlimited upside with capped downside to stop loss in profit. So you know exactly what you're doing. Once it hits, for me, I like to scale out between 5 and 10%, throw a stop at a little bit higher than break even, and then let it go.
That's it. Preach past the STV. Past the STV.
I'm gonna keep saying it. I'm gonna be a broken record, making sure you guys start doing this. For those of you guys that aren't, those 3 videos, again, I call them the holy trinity of taking it to the next level.
Yes. Yes. Baba. So do you want Baba on the daily or the 5 minute?
Pablo, I don't think I'd touch on the daily. That thing loves to fly around.
Ooh. Okay. Baba, you're looking at it on the daily. Ooh.
You're gonna look at it and be like, it just goes all over the place.
It has been consolidating on the 13 for what's that? Almost,
A week or two.
yeah, 2 weeks, 10, 12 trading days. This is pretty wild. Okay. SCB,
Yeah.
just a little common sense here, right? Right. So let's talk about like sector cycles,
Mm-hmm.
right? It is not a retail cycle right now.
That.
The Targets, the Walmarts, the Babas. It's not.
It's a.
I mean,
It's
that sector, I don't think people really care for it right now because it's not a money making season. Maybe you'll
now. It's
go,
not.
yeah. Maybe you'll jump into it when you're playing earnings, or some people like to play around with this during earnings. But with discretionary spending being crunched even more, I think we see the likes of like the Babas, the Walmarts, and the Targets just feeling it a little bit this year. What do you think?
It depends on how the earnings are. That like when they report. Because if you start, they could catch it right where they have a good Q4. And by the time that they report their earnings, their guidance could be better depending on what the economic conditions are. But it's really just going to be a wait and see until their earnings. I mean, again, it's like I'm not trying to predict it. It's like if they're going to move and give me what I need on the 5 minute, cool, I'll trade it.
Yeah, yeah. Let's see. Amazon on the daily. Ooh.
Let's see.
Black Friday did not help Amazon whatsoever. Let's see. Did we get a Black Friday? I mean, we saw a bounce off of 85, 87, and just literally consolidated. Black Friday was pretty muted for Amazon this year.
Yeah, I think they did good, but it like I don't think it affected the underlying share price all that much.
Yeah. Oh boy. Um Amazon. Dude, I'm looking at this. Okay, guys, this is an MACD that you don't trust. This is actually something worth highlighting. You see this garbage here? That's worthless. That's not giving you any bit of information. Along with the RSI, you see the RSI is literally oscillating underneath its moving average. And nothing here screams buy at this point, nor does it scream sell. It just screams stay away for now.
Mm-hmm.
That's it.
And Tuxedo, nothing new on the TLT play. It has to do with Powell, so nothing new. I'll let you know. Don't worry. I'm not just gonna leave you hanging on the TLT stuff. There's a time and a place. It's not now. It may not even be this year. I don't know.
May not. May not. Oh boy, oh boy, oh boy. All right, let's see. Hola, good-looking gents.
What's up, Cody?
What's up, Cody? All right. So, ladies and gentlemen, we're going to go ahead and wrap this up. It is a Friday, but we have something exciting
Monday
to share with you tomorrow morning. Want to share with them, STV?
Well, we can talk about it tomorrow because technically tomorrow's public live day. So we can tell everybody about it tomorrow.
Okay. All right. Absolutely. All right, ladies and gentlemen. So keep your buttholes clenched until tomorrow. We got exciting news for you.
Mm-hmm. And again, guys, make sure that if you guys want to hop in there with us, start the year off right. 2 weeks for free. Trade1348.com.
Before we go, Tesla. They just want to see Tesla before we go. Tesla on a daily, I mean, it's in the dumpster. Pretty much. You're consolidating at levels here. You could see an RSI bounce, a technical bounce here with the RSI, but I don't know. It's really, really hard to tell at this point. It's a whole new year, maybe just a whole new clean slate for the market. Who knows? But as it stands right now, I'm probably staying away from Tesla until I see more of a defined move. All I'm really seeing here is just channeling here in these levels. So nothing really to go by that.
I'd look at Tesla on the 4 hour. That's what I would do. Little hint there. I'd say watch Tesla on the 4 hour.
Yes, and you're at 123 and you got the 48 at 133. Tesla could definitely make $10 moves.
Mm-hmm.
Easily. It definitely can. So, yeah, but let's just wait it out and play it safe. Let's see. Diana's dropping some FAQs here.
So so here's the thing. If Tesla's going to rip, it'll cross up in the pre-market and then it's going to be a chase, is how I would see it. So the only thing that I would look at on Tesla is a potential reversal later in the day, because if the reaction is going to be positive on their deliveries, then it's already going to have made the move in the pre-market.
Yeah. I also will say this, and you know, maybe some won't agree with me, but Elon is now the second most hated man on Earth because of what he's doing with Twitter. And you know, we know what happened with the first hated man, right? You just gotta be careful, right? I mean, again, when you weaponize the dollar, you know, the stock market is pretty much a popularity contest, guys. That's really what it is, right?
Mm-hmm.
If people like the stock, they buy it. If they don't like the stock, they sell it. So let's just really, really keep an eye on that, especially with sentiment towards Musk.
Yep.
Before jumping in on Tesla. Outside of that, go ahead and play the 5 minutes. You know, play that volatility and have fun, right?
Mm-hmm.
Anything else to add, buddy?
I'm good.
All right. We're signing out, guys.